Opening a bank account for your PMA seems simple, but it's a minefield of legal and financial risks. Many PMAs believe they are tax-exempt. The IRS calls this a frivolous position and can issue automatic penalties. This is confusing because PMAs are founded on constitutional rights of free assembly, letting them operate privately. So how do you balance these private rights with the realities of the public banking and tax systems? In this video, we'll cover the legal foundation, banking steps, hidden risks, and strategic choices that protect you. Let's start at the beginning. Most PMAs are unincorporated associations. This structure is key to their privacy. Unlike an LLC, unincorporated means no legal shield exists between the association's debts and its members. If the PMA owes money, creditors can target the personal assets. This is why a dedicated bank account isn't a convenience. It's your first line of defense. It creates practical separation and allows for transparent financial management. This financial separation is vital. PMAs operate on private contracts and member autonomy, not public accountability, which is a foreign concept to many banks. And that's the problem. Traditional banks aren't built for the PMA model. They don't understand the structure or needs, leading to friction and account denials. So, if they're constitutionally protected but confusing to banks, how do you actually get an account open? It comes down to preparation and presentation. Why this matters? Before you walk into a bank, you must signal you are a formal entity. An effective step for this is getting an employer identification number from the IRS. Why this works? An EIN acts as a social security number for an organization. To a banker, it's a familiar official identifier that puts you into a recognizable category. With your EIN in hand, you'll need documents. But what papers are required? And which document should you never show a bank? You're about to find out. Why this matters? The words you use with the banker are critical. Avoid the term PMA if possible, as it can cause confusion and trigger unnecessary scrutiny. Let's get practical. Here is your checklist. 1. Your EIN confirmation letter. 2. The founder's social security number and ID. 3. Your official bylaws. Never volunteer your internal articles of association. Why? They are your private contract and may contain language that will instantly get your application flagged. Instead of PMA, use terms like unincorporated entity, faith-based organization, or ministry, or simply a private social club. For a smoother process, avoid the big commercial banks. Credit unions are often a better fit. They are member-owned and more familiar with community-based structures. Congratulations, your account is open. But the biggest dangers are still ahead. Is your money actually safe from the IRS? Let's tackle the most dangerous misconception. PMAs are not automatically tax-exempt. There is no blanket exemption in the tax code for a private membership association. This is so serious, it must be repeated. As stated at the start, the IRS explicitly lists claiming to be a PMA for tax exemption as a frivolous position that triggers penalties. But here is a surprising fact. While you're not automatically exempt, you have flexibility. Your PMA can choose how it wants to be taxed. This is a powerful strategic tool. For example, you can file an 1120 tax return and opt to be treated as a corporation for tax purposes. This can add a layer of formal legitimacy to your operations. Even with tax compliance, your PMA's privacy isn't absolute. Courts have ruled that constitutional protections do not apply if a PMA's actions pose a clear and present danger. This ambiguity, especially around member privacy and nonprofit claims, can attract scrutiny from regulators. Your internal operations must be flawless to withstand it. With personal liability, complex tax rules, and privacy limits, how do you create a resilient PMA? The answer is connecting these risks to your structural choices. Recall the personal liability risk of being unincorporated, and recall you can choose to be taxed as a corporation, which builds a strong argument for liability protection. We also discuss the risk of legal ambiguity, attracting scrutiny. Your best defense is impeccable internal governance and transparent leadership, guided by your bylaws. The successful PMA operates on two levels. Internally, it's a private entity based on member contracts. Externally, it presents as a compliant, formally structured organization. You've done the hard work of setting up correctly. What are the final day-to-day mistakes that can undo it all? 3 quick mistakes to avoid. 1. Neglecting to monitor accounts for fraud. 2. Incurring unnecessary bank fees. 3. Failing to require dual signatures for large transactions. As we've seen, banking for a PMA is far more than opening an account. It requires a deep understanding of its unique legal, tax, and operational landscape to succeed. The freedom of a PMA comes with profound responsibility. Success belongs to those who apply professionalism to their financial dealings while protecting their private rights. If you're running a PMA, share this video with your leadership team. For professional assistance in preparing your banking documents, click the link in the description.